Okay, Vikas Khemani is now joining us, and we just want to go straight to him with respect to what he's making of things. He's, of course, been a stock picker, has created wealth in his fund for his investors over the last few years, and really is focused on the emerging segments in the market. Mid caps, small caps, naturally is, of course, where bulk of those ideas lie. He's founder, Carnelian Asset Management and Advisors. Vikas, good morning. Great to have you with us here. Thanks very much for joining us. First, I just wanted to get a mood check from you. And what happened? You know, the broader market pain has been there for a while, but yesterday, just reading the screen, it felt like people throwing in the towel. So, what happened in your opinion? And of course, more importantly, what's likely to happen from here?
I mean, I don't know exactly what happened, but what I've heard is that there was a little bit of margin funding selling which came through, especially from the retail investors, is what I've heard, but there's no way for me to verify that. And I think broader market pain, as you rightly said, has been there for some time. Large caps have been, kind of leading this rally in last, couple of months. But I guess wherever there was a froth, which has kind of got clear or is getting clear, that's a good news. It's part of any market, so cycle. We all know that last year there were lots of excesses which were built in many sectors and subsegments, and in last 6 to 8 months we have seen them clearing out and getting better. So, and that cleaning process is in some sense very good. Also, I think there's a significant supply of paper, and we have seen how not so good quality paper have not found and been struggling for last 6 to 8 months to see the market. So I think in some sense that the whole good quality cleaning process has been going on, and which is a good news in the market, because these are the things which are structurally good for market's health, and also gives a check to the investors that why quality is important, why investing is not just buying momentum. And to my mind, nothing changes. Market continues to remain sort of one of the most promising market. It's a stock pickers market. That's where we always focus. So I think that journey continues. And these kind of times only give you more opportunity to look at interesting ideas, which otherwise, in bull market, you don't get at a good price.
Because, Vikas, just to finish that point, for viewers who are watching, right, and I think we had Parag Thakkar earlier with us, and he was talking about how over the last 2 days he's become more constructive on small caps, and I asked him, from a timing perspective, of course, you can't time things down to the T ever, but, do you have a view if there is, at least in the very near term, I mean, the market is headed one way, you want to sidestep it if possible and then buy what you like anyway. Maybe, a week later, 10 days later. Any thoughts at all? You don't want to get caught up in maybe like a bit of a downdrift. You want to get better prices, essentially. That's my question. Vikas, go on.
I would say it's not like crazy downdrift in some sense. Like, yes, of course, we've also seen stocks doing well in last, market recovered also and went to 26,000 levels of Nifty, and in mid and small cap also we see a bit of a recovery. So it's not like there's some major crisis which is brewing and one should worry about, These are the, like I said, temporary correction or, cycles, which, and it boils down to, if you like a stock, a company, nobody can say I will buy at the bottom, which is impossible. So you have to buy within, as long as it is in your comfort zone, strike zone, that this looks pretty interesting at a valuation where you are comfortable with, and based on your understanding of the growth and the business model. So I think, that's what I mean. Timing the bottom is almost impossible. And when sentiments are down, that's the time we all know that we get the best values and best buys. So hence, I would say that current whatever is going on is a good buyer's market, a good stock pickers market.
Vikas, morning. Rima here. One of the structural themes that you're very bullish on has always been Make in India. And these electronic manufacturing companies, EMS companies, were the poster boys of Make in India and phenomenal returns over the last 5 years. But this year, there's been a big crack in stocks like a Keynes Tech, PG, Electroplast, etc. What are your thoughts on what we're seeing, the kind of collapse, like Keynes Tech is down more than 50% on a year-to-date basis? And two, is it a part of your portfolio? And are these the stocks where you're saying you're getting them attractive now?
First of all, I think Make in India or manufacturing story is not only about electronics manufacturing. It is far, far, far more wider, whether it is specialty chemicals, APIs, CDMO, electronics, defense, capital goods, textiles, garments. I mean, it's a very wide sort of segment. So, of course, electronics manufacturing remains a very good segment. But if you see, after the early part, there was a lot of froth got built. Low margin companies got traded at unsustainable valuations. And I think we don't own any of them since last 1.5 years because we felt that there's a lot of froth which is there and it cannot sustain. And that's what is playing out. It happens same way. I think if you see chemicals played out between 2020 to 2022, and then last 2 years we've seen the pain. So in a long-term structural trend, also you will see intermittent cycles and corrections. When markets get too bullish, the time to kind of get out because you can't sustain 70, 80p, 90p with a even if the growth is 20-25%. So our view has been be cautious on this segment. We've been very bullish in last couple of years on CDMO. That's what we've been playing a lot, and that's where we found a lot of interesting. And we've done very well on this year, through the likes of Laura's, Biocon, and many more, and Newland, and many more. So I think everybody finds their own niche, and where you understand the risk reward. But manufacturing theme is intact, will be there for next 10 years, but one has to be watchful of the intermittent cycles and the risk reward of those cycles.
Any other pockets in manufacturing where there is froth building up, like in EMS where you were cautious, you didn't own anything for the last 1.5 years? Is there any other pocket in manufacturing as the broad theme?
We've been avoiding EMS, defense, railways for last 1.5, 2 years. And I think that's where have been our kind of avoid the trade for last 2 years. We've been, so I guess a lot of corrections have happened, and then, and probably to some extent you will still find, in a lot of IPO which went. I guess still there is a lot of, in my opinion, froth, and we've been avoiding most of the IPOs in last 8-9 months. So I think you have to see segments where there's a lot of euphoria, people are chasing. Whether it is about anything, it is not about manufacturing or anything. It's about, so wherever the whole market is changing and valuations becomes unsustainable, given the growth and risk reward, you have to avoid. So that's what we do.
Hi Vikas, good morning. Good to see you, and good to hear. The timing of the exits as well have been important. I recall Tejas Network, some of those EMS stocks like you have mentioned, you all played it and in fact got out at the right time when things got a little bit frothy. CDMO is one space that you've highlighted, which will be interesting to see. A stock like Laurus disappointed for many quarters, and then they started delivering, and the street is quite excited about it. But getting into 2026, how are you feeling about the markets? You have been, one of those most bullish commentators that we hear. What is the single biggest risk for our markets? Because the RBI has done their part, the central government as well has done enough to spur growth from here on. However, the global environment is still a little bit tacky because we don't have that trade deal on the table as yet. Is that the biggest risk?
I think I would not call that the biggest risk. Trade deal can happen anytime, and I think there's a high probability of that's happening. But again, you will never know till it happens. But I don't think that's like one of the biggest risks. Of course, you don't want any kind of adversities with US, but if that's given, and I'm sure it'll work out. But I'm quite positive about markets given 2026, because I think 25 has not been so great year, and every 3-4 years there will always be a market which kind of gives soft return. If you remember, I take you back to the memory. 2022 was that year. 21 was great. 22 was poor. And most people turned bearish, and 23 ended up being good year. First half of 24 was good year. So, and then we saw sort of September onwards, market kind of peaking out, correcting, and then we went through this whole trade deal. And when in 22, it was Ukraine war, which was dominating the sentiment. Now, Operation Sindoor trade deal has been dominating the sentiment in this year. So I guess, uncertainties, in investing, vintage matters a lot. And I used to say this in 2022, that this vintage will, sort of give very good risk reward returns. Even if after this correction, 22 vintage is giving good returns. So I do believe that even, in 25 or early 26 vintage will give a very good return. I do believe that 2026 will be a good year for the simple reason you have seen, you are seeing earning recovery happening. You are seeing monetary stimulus. You are seeing fiscal stimulus. You are seeing, one of the significant underperformance vis-a-vis any of the emerging markets. This year, India has delivered almost negligible return in dollar terms or even rupee terms. So I think, all kind of stars seems to be getting aligned, and there will be one trigger where I think, in my opinion, markets will do well. So, and trigger comes, we don't know when it comes. It's like I said, 2022, nobody knew when the trigger will come. When everybody was bearish, market kind of turned back and, started doing well. So same way, I guess, in 2026, I'm quite optimistic about it. as far as the risk is concerned, I think this can come from any sources you don't expect and any time, you don't expect. It's very hard to kind of predict that this risk will come from this. But generally speaking, I've been saying this, I don't see any structural risk as far as India is concerned. Tactical risk can come, maybe slowdown of the domestic flow. To tactical risk can come from oversupply of IPO. Tactical risk can come from, some regulatory changes. Those are the ones which one cannot really predict and call for.
Just one point, with regard to this advanced decline ratio, the breadth of the market is so bad. And in the past, when it's got so bad, actually, the rebound has been equally as powerful. And there were signs of some retail capitulation. And the last time we saw this sort of retail selling as well, where the larger clients came in there and sold, there was a bit of a bounce. How far are we from that bounce? That's going to be important. But the broader markets have seen a sharp correction.
Yeah, absolutely. Vikas, if you will allow it, so we're talking about excesses and excesses getting cleaned out, and eventually that'll be healthy for the market, as we've seen over the years and past cycles as well. I have a, if you will, as I said, if you will allow it, I have a viewer question on PTC Industries, and I think it's a stock that you own. We've spoken with the company, outstanding defense play, and FY 27 is going to be, if I have my notes correct, 27 is going to be a big acceleration year, and 28 is going to be even bigger acceleration year in terms of earnings growth. But even at, I'm looking at some projections, 450 rupees in earnings per share on 28 earnings. It still comes to you at about 40 times earnings. Just your thoughts, Vikas, on something like this, and your thoughts.
Prashant, it will be unfair on my part to comment. It's a good company. Now anybody wants to invest can do their own research, and especially I do not comment on my personal holdings and all those things. So it'll be hard for me to do that. But, all I can say, it's a good company. Now, whether to buy or not to buy is everybody's individual call.
To buy or not to buy. No, got that. Sorry, you earlier were talking about, did you say fintech is going to be a good year for fintech next year? Is that what you said? Or did I misheard you?
No, I didn't say for fintech. I said generally it should be a good year for market. Financials are, of course, likely to do well.
Okay.
So I didn't comment specifically on fintech. But in general, I'm quite optimistic about, markets for next year.
So in terms of the sectors you like, just to recap this entire conversation, manufacturing, particularly CDMO, specialty chemicals, finance you've been bullish about. And the other theme is, I believe, luxury discretionary spending. In that, you've spoken about it in the past. Do you still like it? And if yes, sub-themes, sub-segments in that?
I think consumer is something we've been quite positive since last 6 months. We never owned consumer in last 5 years, but in last 6 months we added a lot, and specifically we added automobiles. We think that there's a good sort of uptick which is happening in that after a long time. We are beginning to see, and it's likely to sustain. Derivative of that, you can play in auto components as well. Within automobiles, consumer, of course, discretionary will do well. Companies like which are positioned in the consumer discretionary, likes of LG, Voltas, and all those kind of companies, basket can do very well. Of course, individual risk what one has to understand, but in segment as a pack, we are quite optimistic about it. One more sub-segment I think we like is CV cycle. We think a CV cycle is coming after a long lull. Maybe still not pre-COVID levels, and now we are beginning to see sort of pick up out there, and which typically can last 2-3 years. With this time around, interesting part is there's a good profitability structure as well. So, and balance sheets are solid. So I think that segment has the potential to get even re-rated.
All right, Vikas, we'll leave it there. Thank you very much for joining us, and we'll leave you to it on those decisions as you put well, to buy or not to buy, right? And each one, of course, will have to make their own decisions. But for now, it's a market which has been under pressure for some time, as I said, especially broader markets, and yesterday felt particularly painful.